All right, good afternoon, everyone. Hope you all are having a wonderful Sunday. Happy Father's Day to all the dads out there. Let's go ahead and take a look and see where Bitcoin is going here today. So far on our daily candle, we have a compression candle right here, as you guys can see. I was expecting us to stay within this range of 63,372 and 64,410 this weekend. I did think that it was going to be a more of a bullish weekend, so we are kind of getting that follow through. Now, come daily candle close, I am expecting, I'm hoping for a dip the first couple of days, which will basically guarantee more of a bullish move as long as we can get a somewhat of a wick to the downside. Let's take a look at our weekly real quick. So, on the weekly, you can kind of see we have, from this week, we have some resistance around 67. What was it? 67. 268 is our high there. So 67, 268 is kind of where we're seeing some resistance. Not being able to really close even above the 65, 705 probably. And I was also expecting that where, I said that we probably aren't going to revisit weekly open since we tested it bearishly. So 65, 6, we kind of are getting rejected off of the 65, 6, 65, 7 area. So dropping down, within this range again. Um, I mean, so far, as long as we keep this low right here, we have to assume that it's our low for right now. We can there's obviously a ton of liquidity to the downside, and we can say all we want that, we want prices lower, but until it actually happens, we have to assume that we're going to be within this consolidation area that I pointed out the other day. So if I were to pull up, for example, my Kraken chart here, and you can see, the only unfortunate thing with this is that we are still in the premium of the range technically because we are above that 50% line at 62,171. However, we did dip into a discount a couple of times, right, over these last 2 weeks. So overall, I mean, if we look at the month, June is turning out to be more of like a bearish month so far, more of a bearish expansive month. Um, you know, Ideally within the past or these past or these last 9 days, I should say, sorry, these last 9 days, we basically want to see price working its way back up. We want to see resistance out of this area. I do not want to see us go, closer down and close closer to the end of this wick, or for us to even get closer to the end of this wick. I would like to ideally, at the lowest, see us taking out this double bottom right here, or sorry, right here it is, at 62,000-ish. There's a lot of liquidity right there, so I would ideally like for us to take this out. Maybe, I don't know where this fib is here. Let's take a look though. If I were to pull this from wick to wick, we kind of front ran it, and I think we talked about that. So ideally, taking out this double bottom right here, dipping below, hitting this 62,179 or a little bit lower, and then bouncing from there. So my lowest I want to see for the remainder of the month would be that 62,179 if we were to get there. If we lose that and we drop below 62,000, there's a really good chance that this whole structure is bearish and we're gonna fall, right? I don't see us, really bouncing anywhere other than that area. I would probably call that my line in the sand for right now, that 62,179. I know I mentioned there's like a 61,800, I believe, area, but um, to stay bullish, I would say we have to keep this line right here at 62,179. Let's go back to our chart here on BitGet. And let me take a look and see kind of what we're doing in the smaller time frame. So going into like the 8 hour, not really the best scenario here. You kind of have a swing high right here. And then it's obviously dropping down. Hopefully we get another compression candle right here and then see where we're going to go. But I really don't like the fact that we really didn't retrace too much right here. I would have loved to see more of a, retracement down, testing some of this, like this 63,372 support area, and then bouncing back up. Best case scenario, honestly, for this week would be that 63,372 holds. When we make our bottom for the week, we don't dip below it. And this holds, and then that is our bottom for the week, and we just keep expanding higher. So that's honestly the best case scenario. I would be targeting that. I still haven't really seen liquidity, so we will take a look at trading different to see where liquidity lies with that number. But I would definitely have 63,372 on your charts, to basically compare and see if we are going to have a bullish week, I would like to see that hold, right? Going into the 4 hour, so the 4 hour kind of showing the same type of thing here. A lot of compression candles. So after compression, obviously comes expansion, compression, expansion, and I know I showed you on the daily compression, expansion, compression, expansion. We were in that for a while. So I am expecting for us to have, an expansion candle sooner rather than later on these bigger time frames. Going into the 1 hour, I was hoping that we would stay above this 21 MA, but it looks like we're making a curve for right now. So definitely showing more of a head and shoulders like pattern. I mean, on a positive note, like I said, we want to start off this new weekly open bearish, right? So we want to drop first when 5 o'clock comes around, Pacific Standard Time. We want to drop first, and basically make that tail for the week and then expand from there. So I definitely am leaning more bearish today. I think that, ideally we want the market to dump first when our weekly open happens. And you can kind of see this kind of like a head and shoulders kind of pattern here, right? Shoulder, head, right shoulder on our way down. So definitely kind of expecting that for today. Let's go ahead and go into trading different though and see what we see on the charts here. So when it comes to the daily, let me check off our liquidity pools here. So not too much still to the upside. If I zoom in, we have a little bit to 69,620. Not a lot to really write home about. A lot of open space, a lot of, basically there's liquidity, but there's not a lot of consolidated liquidity, right? So there's just a lot of liquidity in general, but it's not consolidated like what we need it to be in order to move up. So still looks like we're going to go to the downside according to the daily. Probably, test closer to that discount area. Probability wise, it's saying we're going to test closer to the discount area of that previous consolidation range. So getting into the 57, 54,000 range. Let's take a look at our 4 hour. So our 4 hour, taking a look at that, we have our 25x checked off. So you can see we can drop down below, even 58, maybe have some resistance there. It does look like we have, a spot around 61.8. And that was one I was targeting in the past, but that would be taking out that double bottom, which, it could happen, right? If we do get a pretty decent bearish move, Sunday, Monday, Tuesday, we could break that 63, 3 area and drop into here, wipe out this double bottom and launch from there, right? That would be, ideal as well. So really it's going to depend on how deep price wants to go with this. I mean, we have it at 63.3. We do have some above, right? 66,000, 67,000, all the way up to 69,000, 70,000-ish area. Moving down into our 1 hour. So 1 hour, let's take a look here. Kind of portraying the same thing, right? I mean, we are seeing the fact that there is more liquidity to the downside, taking out this double bottom right here. I wouldn't be surprised if we, basically sweep through the 63.3 area. I would like to see it hold, but it doesn't have to. Especially with all this liquidity down here. All these people went long down here. So, probability wise, you're probably going to see this be taken out, hopefully early this week, and then for us to launch. That's like my ideal expectation. Again, I don't, I'm going to play the market whatever way it takes me. I'm not, completely 100% heart set on a specific idea. This is just kind of my analysis and what I'm seeing, based off of liquidity and support levels. Okay. So 63.3, that kind of, basically takes out this block of 100x. If we start going into 50x, that wouldn't surprise me. So 50x would take us all the way down here. But if we are extremely bullish for the rest of the month, we're probably going to just take out 63.3, this block right here, and then move on up. Okay. Let's finally take a look at the 15-minute, and then we'll also take a look at the simple map too as well to see kind of what's going on there. So the 15-minute, here you can see that, we have this nice yellow liquidity right around 63.6. Unfortunately, we would lose at 200, so more than likely we would get a decent move to the downside if that were to happen. At least to that 63.3, if not diving deeper. So something to definitely think about when it comes to the smaller time frames. They are saying that if we were to lose that level, since the moving averages are getting so tight, there's a good probability that we're going to go deeper, right, than that 63.3. Um, 50x, again, still lines up with that 62,000 area. So that's going to be, if we get down here, I mean, this is going to be for me, not financial advice, but I'm probably going to take advantage and make a decently sized long right here if we can get down and take this out. This is a lot of red liquidity, and usually after a lot of concentrated liquidity, you'll see a bounce. So I'm gonna have a limit order somewhere in here. I'll probably front run it, maybe just barely to the double bottom right there, and then just have a deeper stop to make sure I don't get stopped out. Um, so anyways, guys, that's what I'm seeing on the 15 minute when it comes to the 50x and 100x liquidity. Going over here to Kiyotaka, which is our free order book, will really align with where our liquidity's at. You can kind of see the same thing, right? You can see that there's some orders above around 65,000-ish area starting. We have a decent amount, but then there's a lot of, orders down here, down even to 61.8. It looks like, which could be used as support potentially. So, because we are seeing whenever there are orders consistent like this, consistently together, unless we're in a really bullish or bearish environment, it's usually used as resistance or treated as resistance. So I would assume, based off of looking at this, that we're probably going to dump. This is probably going to be like some sort of Bart Simpson or Head and Shoulders, and we're going to fall. Possibly using this as support down here, unless there's another big order that gets put in here and it reverses price the other way. So that's what I'm seeing for Kiyotaka. Let's take a look finally at the simple map for trading different. Let's see, simple map. And real quick, guys, if you guys do want to use these tools, I know I give you guys, once to twice a day updates during the week. I know that JP at Sin City Crypto uses it as well, but if you guys want to use this for your own trading, which I highly recommend, it definitely gives you a very insightful view of the market, where liquidity's at, where price is most likely to go. Feel free to use my code tradingdifferent.com/code/Sean right here. You'll get 10% off the entire suite of tools. It is not a cheap tool set per se, but it's highly worth it in my opinion. So feel free to use that code Sean to get 10% off of your tool set through Trading Different. So let's take a look and see finally the simple map. So the simple map, taking a look, this is going to be your scalping time frame. So like I mentioned before, this is going to be your 15-minute, your 5-minute, your hourly. This is kind of what encompasses the scalping chart. We kind of have an equal amount of 100x liquidity on both sides almost. I would say that there's a little bit more to the downside, right? More short term. This is a wider pool right here than this. But in general, there's more, 25x, 10x, 50x to the upside, right? After that point. So it does allude to the fact that we will probably this week take this out, hopefully. I wouldn't be surprised though that, we just kind of fall today through tomorrow. We fall through here, take some of this out, and then come back here for the rest of it, right? So anyways, that's what I'm seeing for the scalping time frame. Now, when it comes to swing, like our swing trading bias, that's going to be on your 4-hour and your daily. So when it comes to that, you have, obviously more 25x and 10x to the downside, all the way to about 59,000-ish. Not the best sign, right? But after you get through 67,000, then you have a lot more 25 and 10x to the upside. So as long as, we can just move down a little bit maybe, and then start taking some of this out, it's going to have to drive through a lot of this 25x right here, up to 67,000. We have a good chance of starting to take a lot of this higher density liquidity out on the bigger time frames, right? 25x and 10x is a higher density pool rather than 5x and 3x. Doesn't mean that this is our bottom, but it does mean that, we have a chance for the remainder of the month to take some of this out up here. So, on a micro or meso kind of time frame, which is where the scalping is, I'm seeing there's probably a better chance that we move to the downside temporarily. On a swing-based scale, meso to macro time frame, I would say that there is a potential now, that we, as long as we can take some of this out, that we move to the upside a little bit for the remainder of the month, and then maybe, wipe out some of this bearish area. I still think that this is a bearish structure overall. I am bullish, cautiously bullish, more of the smaller time frames. I know that for today, it doesn't look great. Both time frames look bearish, but I am hopeful that for the remainder of June that we can have a bullish finish basically to the month. So anyways, guys, that is what I'm seeing so far in the markets for Bitcoin. I hope you guys have a wonderful day. Again, happy Father's Day. Take care, and I will talk to you all tomorrow. See you later.